They're still undecided who controls the Senate. It's most likely going to be Republicans still, but there's a runoff in Georgia in January. Assuming the Republicans maintain the Senate, I think the progressive agenda of the Biden administration, which was greater stimulus, greater healthcare regulation, technology regulation as well, higher taxes, I think all of those are certainly going to be pushed for, and there's going to be an impetus to this, and that one would think there would be some level of support and finality on that. But I also think it's going to be a lot more muted because of the split government we have at the moment. As we can see, this also has had a significant market impact, and that's been quite substantial. Going into the election, there was an expectation of potentially a blue wave, and that was seen to be very inflationary, fiscal stimulus and the like, and you saw a rotation into value shares and lower duration equities at the expense of growth. That suddenly changed basically on election night and the day or two thereafter. But as crazy as this year and month has been, it subsequently changed dramatically again on the positive announcement of the Pfizer vaccine trials, where it looks like a vaccine is going to be sooner rather than later. And we've actually seen one of the greatest rotational moves in history, where growth companies like NASDAQ-linked companies and high PE ones have dropped significantly, while financials, industrials, and lower PE, more cyclically sensitive companies have gone up significantly just in the last couple of days. There's been a lot of events that have kept volatility high. Up until recently, you had election uncertainty. You've still got a little bit of that, but it was a lot more uncertain a couple of weeks ago. You had rising COVID cases, and there was a lockdowns happening within Europe and calls for sort of certain areas within the US as well. And you've also had impasse on the stimulus bill. In the last couple of days, some of those things have already occurred, so we now know more or less the election result. We have some idea of what government actions will be on stimulus, which will be more muted. And we also have most recently the Pfizer announcement on the vaccine, which looks like it's going to be a lot earlier than otherwise would have seen. So these things have combined just in the last couple of days to bring volatility down quite significantly, albeit from a very high level. So from a historical, so if you look over the last 10 or 20 years, volatility today is still very, very elevated. And we still think this remains elevated because the path of economic outcomes is still very uncertain. We still don't have perfect clarity about the US election. And obviously COVID notwithstanding, there's a vaccine on the horizon. We do have record cases, hospitalizations were at a record just the last few days. So all of these things are going to keep uncertainty at a high level and volatility elevated. There's likely to be greater privacy laws, there's greater regulation, there's even calls for potentially breaking up some of the big five kind of monopoly type tech names. It's likely that the outcome will be less than that, but the easy ride of lower taxes, almost unregulated, allowing them to have monopolistic structures, I think those are going to become more and more difficult, and the Biden administration is certainly going to attack that more than I think the Trump administration did. Yeah, the financial sector is most strongly correlated to changes in interest rates and economic activity. Reflation and higher inflationary expectations that would be expected if there was sort of unchecked economic stimulus from a fiscal side, which we would expect to be more likely under a blue sweep, notwithstanding a Democrat-controlled agenda, which I think is still the case. Whether it gets approved or not is undecided, is certainly more inflationary, which is supportive of higher yields, and financials would benefit significantly in that environment. Because of climate change and concerns about that, we think certainly it's going to be more difficult domestically within the US, whether it's permitting on government land, whether it's investment or subsidies into competitive sources of energy like solar, wind, and the like. Notwithstanding, obviously oil and coal still remain a substantial part of the energy mix in the US. So we don't think that's going to change dramatically, but we do think there's certainly going to be push towards more green energy type initiatives.